Thank you very much. Double dose of Tom and Robby, I think, because Robby's on and off the stage very quickly. Hello, everyone. My name's Gareth Jenkinson. I'm a journalist for Cointelegraph, recently appointed managing editor. It's a great pleasure to be at NBX. I hosted a panel yesterday, and I'm here on stage again today. We're going to be chatting about venture capital in Web3. Obviously, a lot of interest in the space, especially with a bull run kind of kicking off. And I wanted to just quickly touch on the story that Cointelegraph covered recently, just to set the stage for this panel. And the headline by my colleague Ana Paula Pereira reads, Venture Capital pours $2.4 billion into crypto startups in early 2024. $2.5 billion coming into the space. That's according to research from Galaxy Research. And these are like 600 deals in the first quarter of 2024. And that marks a 68% rise in deal count from the final quarter of 2023. So it's very clear to see that perception has changed in the space, and people, venture capitalists, are looking to spend money. So I think the first point of topic and conversation will just be the bull run and how that's changed things. Robby, maybe you can kick it off.
Sure.
and you know, as a venture capitalist, really,
happy to.
How it's changed.
So I think first I'd like to make one clarification, which is, number one, it's great. I mean, obviously, investment in the space has increased dramatically, but I do think that there's a difference between investors who invest in tokens and who invest in equity. Because at least in my experience, investors who invest in equity have not come back as quickly. And particularly, it's more crypto-native investors, I think, who are quicker to react to market conditions and making token investments, and ourselves included, and it's definitely business as usual.
Miko?
Yeah, I think it's pretty important to segment the investment community, right? Because I do feel like there is some resentment of the venture community, and I think
not you personally, though.
Some of it is earned, right? Some of it is considerably earned, right? Because the reality is that there's this kind of like, I think Robby's last talk talked a little bit about wealth inequality, right? Class warfare, the rise of socialism, all these kinds of like ideas, right? But the thing that I think people always hate is they hate being dumped on, right? They hate that, obviously there's pumping and dumping, right? So to me, the thing that is important is to really understand who is truly venture capital and who is like some kind of like a coin flipping hedge fund vibe, because trading is zero sum, right? And investment is positive sum, right? So like, to me, the distinction is pretty important, and I think people have this undifferentiated concept of like VC, and there's people who use the term VC very loosely, right? So I think it's important for people to make the distinction, right? Because the non-zero sum VC is really folks who are adding value, whether through strategic value add, right? Like Animoca, or through kind of being working alongside entrepreneurs, like my own fund. So, we're very much kind of thinking about this as a positive sum exercise. So, I think that those are very different. That's a big distinction that I think needs to be made.
Bartosz, your thoughts in general on the bull run?
Yeah, sure. So I guess my perspective maybe it's a bit different because on both sides. So I did both investing and raising in the bear market and in the bull market. In the bear market, investing was actually much easier. Like almost every single deal that showed up and the team that was there, you could have high conviction with like pretty low valuation, and it was pretty easy to actually write the checks. A lot of VCs were kind of scared. They would just hop on the calls and talk, but didn't actually close the deals. So that was the annoying part of the bear market as like raising money. I think it took me like roughly 3 weeks to raise in the bear market and 3 days in the bull market. So that's like the difference in timing. The bull market right now, like last couple of months, has been much harder, especially for me writing like angel checks or from my venture studio, just because people expect higher valuations, and often they try to raise on just the idea. There's no product, the team was just formed, and it's a bit harder to actually find that conviction and connection with the team.
Tom?
think I will add some perspective as well as both investor and person who's been raising last year and this year. And referring back to what Robby said and Miko said as well, it's important to differentiate the type of VCs, and you cannot just name a VC under one umbrella like everyone. Just to tell you a story, like last year was all about the question from VCs, like about the traction, the product, the team, like all solid stuff, okay? And now when I start to get questions, I mean, statistically, when token, okay? And my favorite question is, what's the go-to-market strategy? So then I go with, how do we actually go to market with a product, with building business traction? No. I'm asking about the token, like, what exchanges, what capabilities, etc. Obviously, these are mostly questions from VCs that are not maybe, focused on fundamentals. But anyway, that has changed as much as the appetite for risk, right? The times are as they are. I mean, if I were to name, one word for the, let's say, bull run now, it would be like a psychedelic a little bit. Every bull run is, as a matter of fact, because we had like, this accelerate. I remember Robby and Miko on stage in Berlin last year. It was like literally these days, like 4th, 5th was like the kickoff, okay? I remember Robby was saying, hey, it's a positive sign, but, be kind of respectful for what's happening, not to overhype. And then we had like the expectation of a drop, and then it was rising, and then now it's like falling, and everyone is scared. So basically, there are some emotions that are driving the market now towards more appetite for risk, but in the same time, it quickly changes, but mostly on the side of the VCs that are not that much fundamental.
Yeah. I mean, you make a very good point, because I hosted this panel, in Berlin last year, and it was a completely different conversation. I remember asking you guys, how do you approach raising in the bear market? And it's actually a lot easier for venture capitalists, because the projects that have survived actually have a very good reason to be. It makes your job a lot easier, because you know that these people have survived, they've built a product that might actually have some return on investment. Is it harder to allocate funds now to what's happening? Because it's just a lot of froth, a lot of noise, and a lot of new people coming into the space, maybe just building something that may or may not even go to market.
I'd say it's harder only because we're busier, honestly, just because there is a lot more noise. But I think that for us, at least, we haven't changed our standards at all. We have, if you zoom out to a 5-year timeline, because we did invest in projects in 2020 that were teams that had just formed. Because at that point, most deals I saw were people doing something for the first time in their category. Whereas now, when we're investing in games, for example, we haven't invested in any games, with teams that have just formed for 3 years at least, because now I want to see the results of your live betas. I want to see that you have audience. Things are much more mature because the cohort of companies have also gotten a lot more mature. So I think for us, we're investing very actively, but we're very fortunate because we're actually able to make less risky investments because there are so many opportunities.
You made mention of some of the games. I just want to quickly touch on this. Notcoin is coming up as a really big thing in the TON ecosystem. We can chat a bit more about TON in a little bit. But as someone who's investing in games, when you look at something like this that has such explosive growth, up to almost 30 million players involved within Telegram, do you want to throw money at something like that? And do you see the value proposition of a mining type, affiliate marketing type game? It's quite different from what Animoca kind of does, but you guys are involved in the TON network already as a validator.
So I think our interest is to invest in things that we think take advantage of the network effects of ownership in Web3, and that does. And now Telegram as a platform has the Web3 infrastructure to enable other things to grow on the platform, and as long as they remain interoperable with the rest of Web3, fine. I think that's awesome, because they could have chosen to keep Telegram a walled garden, and that wouldn't really be in the spirit of Web3. So,
we might as well just talk about TON. I don't know how the rest of the panelists feel about the ecosystem in general. I know Tom has obviously got a keen interest in 900 million users on Telegram. It's significant.
I can comment on that. So. Picture this, they have 900 million users actively using Telegram, and now it's I think 30 million that is adopted to Web3 one way or the other. So there's still room to grow in a way. And if they succeed to convert, I don't know, like 15, 20, 25% of that user base within the next few years, that would be huge. Like the amount of the transactions will be way more than on Ethereum, I believe. That's my belief here. And that's something that is unseen in crypto yet. Okay, we haven't seen something like that, and I'm excited about it, and that creates a lot of opportunity for investment in the ecosystem itself, be it in the content that is taking advantage of the network effect, as Robby said, but also the infrastructure companies and projects, right, that can start and help onboarding new content and builders to tons. So there is like a lot to screen and invest potentially. That's the ecosystem that is having a lot of inclusivity as well. So I'm bullish, if I may say.
Yeah, for sure. One of the big narratives that's come back this year is obviously Bitcoin and various developments in improving some functionality, marketing and affinity scamming aside. I'm curious, Bartosz and Miko in particular, how you guys feel about investing in the Bitcoin ecosystem as from a venture capital perspective, just given how much focus there is again in this bull market. It's like Bitcoin Summit.
Yeah, so obviously Bitcoin is the killer application, and the question becomes, is Bitcoin killer infrastructure, right? And I think the complexity of making such an assertion is the complexity of dealing with technology differentiation, right? So there's, as I mentioned before, we're tracking about 200 Bitcoin L2s, and we've seen effectively almost zero differentiation between them. So, I think that as a venture investor, it's pretty disheartening. There's nothing to invest in, honestly. So, we are a little discouraged about the current state. I do think that Bitcoin Core cannot and will not create an opcode in the Bitcoin protocol for accepting off-chain proofs without forking Bitcoin. So I suspect that there won't really be a modular Bitcoin anytime in the near future. So, from our perspective, from a liquidity perspective, Bitcoin is the king. And, if you look at it from the application perspective, I think Bitcoin itself is the killer application of crypto. So, I think to me, I really am excited to have Bitcoin continue to be Bitcoin, and to have Ethereum continue to be Ethereum. And I don't really have a pressing need for Bitcoin to become an inferior Ethereum.
Maybe slightly different perspective. So I'm actually excited about all the opcodes that are being added. I don't think it's necessarily certain if opcat will be included or not. I would say probably like 50-50. But either way, this is like pretty exciting because that might turn out to be biggest airdrop of the next 12 months if we have a fork. So either way, it will be fun. Big believer in runes. So outside of L2s, I think there is a lot of DeFi projects building on Bitcoin natively that are pretty interesting.
What does that mean?
Like, for example,
what does DeFi natively on Bitcoin mean?
So people basically like using runes to start building protocols on top of it. Like,
so are you talking about smart contracts on UTXO?
Yeah.
Okay. I mean, we have something like that. It's called Cardano, and it doesn't work.
I think like
applause line.
No, but I'm keen to keep this going because it's good to have two very conflicting. There's a lot of interest in runes and the development after the halving. So,
I mean,
we need these differing perspectives.
Like, runes benefit quite a bit miners right now. Is like 69,000 runes issued in like a month something that we need? Probably not. But at the same time, I think it brings new excitement in the community. Like the most fun, at least meetups during Token 2049 for me in Dubai were actually Bitcoin meetups of the Rune community where there were just developers. You would show up, there was no VCs, sorry. there was no marketing people, and there were people that were actually like excited about building something. Yeah. So when I look at the like early communities where I invest where you go to the meetup and there's like 15, 20 developers that are excited about building product, and I think that's happening right now with Runes. Regardless if it will be in the Bitcoin core or it will be in the fork, it's pretty interesting for me at least.
Yeah,
Well,
I think. Yeah, go ahead, Rob.
Sorry, I was just going to say 69,000 runes is not so bad if people are making 20,000 tokens on Solana every day.
Yeah, yeah.
Yeah.
This is true.
Yeah, so I actually contributed to the token standard for both fungible and non-fungible tokens on Solana, and like seeing that growth was actually what made Solana fun. So seeing that in Bitcoin brings a lot of similarities, and I think both of those ecosystems could be growing together. There's a lot of people that are launching actually tokens on both, and often those are the same actually people.
Yeah, I think it's worth just giving a bit of context here. So obviously within Bitcoin, Bitcoin maximalists and proponents really advocate for people maintaining control of their coins. And a lot of these Bitcoin layer twos, as they're called, are either bridges, where you're staking your Bitcoin and you're getting some sort of collateral back, or they're looking at different functionality. In the same breath, you have to understand that there are quite a few development houses. I mean, Lightning Labs have been doing lots of great stuff on Lightning, and they are exploring, how to do it better, but still make sure that people maintain custody of their Bitcoin. Right? You're not losing control of your secret phase. Right? So, for me, having heard that a lot of people are getting excited about building within Bitcoin is great, right? Because for many, many years, the network has kind of ossified and everyone's just migrated away to Ethereum, to Solana, all the other protocols, and they stopped thinking about Bitcoin, and now Bitcoin is very much part of the conversation again. I know Miko hates this. I can see that he's very skeptical, which is great.
I think the concern that I have is that the best case scenario is actually a hard fork that I think could be very fractious. So I guess to me, I'm not.
And we've seen this before, right?
Correct.
With Bitcoin Cash, it all happened. So
absolutely. So I'm concerned about it. I think Bitcoin being the killer app deserves sort of respect, and I think having a lot of divisiveness within Bitcoin is undesirable.
We've seen Eigenlayer become like a very big talking point in 2024 as well, restaking. There's a lot of people that are quite worried about this. Is this another potential Terra Luna type situation where we're restaking what we've already staked? The questions around that is quite entertaining for me. I don't know what, as VCs, are you interested in technology advancements like this and what they're doing, or is it a big hands off, we don't want to be involved in this?
Yeah. I mean, we're backers of EtherFi, which is sort of liquid restaking on top of Eigenlayer. We definitely are also backing a number of AVS projects within the Eigenlayer ecosystem. In a way, the thing that's really interesting about this evolution is that it actually has to do with something that's very similar to the Bitcoin L2 evolution, which is that Bitcoin is really safe, so people actually want more risk. Right, so they're doing things like wrapped Bitcoin and crossing bridges and multi-sig bridges and whatnot. Right, so in a similar way, the similar theme applies to the Ethereum community, which is you get essentially 3% staking yield at the base layer of ETH. Right, but that's proving to be very stable and fairly safe. And as soon as something is stable and safe, people want to take more risk. Right, so I think that's really what we're seeing here in both cases, on the Bitcoin side and the Ethereum side.
For me, Eigenlayer, I think the main issue with it, I think it fall prey to the WEN token. I think launching it without slashing was a bit of a mistake.
Yeah, fair call. AI has been a big talking point. I'm still very skeptical about what AI can do in crypto. Are there any protocols that are exploring what AI can do across, whether it be Ethereum or Solana or anything like that, any of you would be interested in investing money in, or is it kind of just a big buzzword that's just trying to make some money in the crypto and blockchain ecosystem?
I mean, I do think as follows, right? Which is that I've been doing a lot of active home experimentation on AI. I'm definitely a daily user of ChatGPT, mostly for programming, actually, which is I tell it what the software to write, and it writes software. So, I'm excited about AI, broadly speaking. I would say that it's really very asymmetric, which is that I think that there are very few highly qualified AI plus blockchain projects because it's mostly blockchainers. And if you think about who's going to win in an AI contest, it'll probably be mostly AI people, right? So the thing that's really scarce is AI people, legitimate AI people who actually want to touch or be anywhere close to anything related to blockchain. It's super scarce. So when you do see a very high quality AI team that's willing to do blockchain for whatever reason, it's pretty interesting. So we do see a few teams like that, but it's not common.
I'll just add a few perspectives here. Like for me, personally, AI is of its own like an enabler of something, accelerator, right? So when you combine it with blockchain, it might result in interesting, new ventures, new applications. In the same time, AI is like a turbulence. It's not deterministic. It's not something that you can fully control, right? And it's scary. It's dangerous, and we need to find ways, how to kind of navigate it somehow. And so, as much as it's like very powerful concept, and obviously tech, but we need to be aware of also the other side. Okay.
I've seen, there's a few cryptocurrency exchanges that are still being built and coming to market. I'm of the opinion that there's enough, right? You've got enough choice now that, what's the point of having more of them? Bartosz, maybe you can have a good, I think you'd be perfectly placed for this one. For new exchanges being built and coming to market, is it difficult to attract money from venture capital? Where are those investments coming from, and how do you actually explain, to potential investors, hey, there's value in getting behind this platform?
Yeah, sure. So I personally approach it from just like technology perspective. So like technologists at heart, I think the gap between what you see in traditional finance and in the crypto exchanges that you have there right now is pretty big in terms of just the quality of what was built. Like NICE is like years ahead in terms of technology or of any crypto exchange, in terms of like speed, performance, and all of that. And that's why I kind of like went into this. I thought like we can improve it. And then for most of the centralized platforms, I think there's like, again, this may be biased because it's Cube. Like I wanted to move it much closer to the blockchain. Like most centralized exchanges, they are not really blockchain native. They interact on the blockchain on the boundary of the system of like deposits and withdrawals. So like getting much more deeply integrated into the DeFi and the smart contract layer, I think has the opening. And the third aspect is I think most of the crypto exchanges that are out there are just using like white label solutions that again are not necessarily built by crypto native people. So that's really, I guess, the pitch. Maybe very weak, but that's why I'm building it.
That's a consideration in itself for investors, right? Because you're building a very bespoke platform that is doing the majority of things on chain. There's a lot longer time frame to building a very good product as opposed to using a white label solution to deploy something.
Yeah, sure. But like I'm passionate about what I'm building, and I think ultimately this is what people are investing in.
I think also you can't talk about this particular discussion without talking about regulation. And so at the end of the day, I think you have to kind of make some parallels with the TradFi world, which is that we live in a world where even prior to big banking consolidation, in most countries you have a stock market, you have a dozen major banks, et cetera, literally sometimes even by city. And so there's no reason that we wouldn't have something mirrored like that in a more regulated Web3 world where we end up with literally thousands of exchanges. And it's true that the commodity may be somewhat, or the technology may be somewhat commoditized, but I think crypto being what it is will then end up with exchange aggregators and exchange aggregators and, and we'll have fun with technology. But I think from a regulatory standpoint, the worst case would be that we all end up with a bunch of neobank-like exchanges who are all basically riding off of Coinbase's license in every country, because then it's a single point of failure and is not really crypto.
Yeah, that is a problem in of itself. You touched on earlier about making speculative investments versus investments very much based on a value proposition. Meme coins have, look, they've been around for a while now, but they've really gone wild in 2024. And my position is that it's degenerate gambling, but people are free to do as they wish. From a venture capital perspective, how would you even approach this? You know, do venture capitalists want to buy some of these tokens? Are they interested in people that are deploying these tokens or the protocols that they're being built on? What are the general thoughts about meme coins and venture capital?
I mean, the highest level is that we bear a professional responsibility to, return funds, and produce great results, right? So great financial results. So with that in mind, we don't really fundamentally object to any space on sort of moral grounds, right? But that being said, the thing that's really complex about the meme coin landscape is that it's zero sum, and in a way, I think the meme coin landscape is sort of a retail rejection of VC coins, right? So in a sense, but the thing that I think is unfortunate about it is that people are running from one unfairness into a different unfairness, looking for fairness, right? So in a sense, like, it would be better if they would find something that has fairness and go play that game, right? So, I think the meme coin game is also very unfair, and it's very stacked, and it's just a different class of predatory activity. So, I don't consider it to be a particularly safe or good activity.
Bartosz, I see you tickling your microphone.
So I agree with the fact that the retail, I guess, is rejecting somewhat like the VC coins, and this is where the meme is bringing the fun. I think it's also an interesting reaction to the regulatory landscape, launching the tokens without any promises or roadmaps or anything. It's actually an interesting path to potentially adding tokens to the projects. So one of the easiest way right now to actually do it in somewhat regulatory ways to adopt the meme coin that was there by just buying it on the open market and saying, hey, this is my token now.
I just recently had an interesting conversation about meme coins with a friend of mine, and how it used to be in the recent bull runs is like, when the meme coins pop off, then it's most likely the end, right? Times are maybe potentially different, but what she said was interesting. Like, maybe now, the society community, especially younger people, they at least start considering having meme coins in their wallets as kind of an identity, kind of, thing that, hey, show me a wallet, what meme coins you have inside, right?
Yeah.
So maybe there is a shift here, referring to the potential utilities. I see it in gaming, frankly speaking. Like, I can imagine that, like, people can have, like, social gaming experiences with the competitions for meme coin tokens, as an example. At least that's, interesting idea. I'm not saying it's going to pop off, but just saying it's interesting. So there's certainly some buzz around it. There is certainly some ways how to grow, but on the professional side, on the VC side, and being responsible, obviously you won't invest in meme coins as a VC.
I mean, I know some VCs that do. Especially, it's pretty interesting if you bring the example of like Bonk and Solana, like how it was launched by like roughly like 30 people on Solana to kind of like bring the interest back to the chain and engagement of the community. So like having some of those meme coins that are actually run in a pretty like well-mannered way can be a proxy of attention to the product.
I've heard other industry commentators say the same thing, that if anything, it's social signaling. And if it's bringing more people into the ecosystem, like, are we complaining? My only problem is that, yes, some people make a lot of money, but a lot of people, will whatever, they throw $1,000 that they shouldn't have thrown there, and then they can't pay their rent because the meme coin went to zero. So that's a problem. We've got a few minutes left. Tokenizing real-world assets has also become like a big talking point. We've seen some serious raise into platforms like Securitize. As a VC, this seems to me like a prime space for return on investment, just considering that mainstream finance is looking at different ways of doing this, and they're looking for the right blockchain protocols to do this, whether they're permissioned or not. Is this a space that you think is going to have some serious return on investment in the next 5 to 10 years?
I do, but I think there's very substantial asymmetries, right? And I think that RWA is what I call a big tent. And what I mean by it's a big tent is that, you know, if it's raining outside and you have a big tent, then you have no idea the people that are climbing under this tent for safety, right? So, you know, to me, the question that you have to ask about real-world assets is, what assets? Right? So, you know, people are like, oh, real estate, or they're like, oh, we're producing movies, or what, like, you know,
Even gold,
I found a ball of lint under my bed, right? So, like, there are assets that people want to buy, and there are assets that people do not want to buy, right? So if you're trying to sell assets that people don't want to buy, then you won't have much luck, right? So to me, like, real-world assets is a huge, big tent, and so I can't, like, for example, my favorite real-world asset is stable coins. But those already have a name. Those are called stable coins. So we don't need a new term called RWA to describe stable coins, right? So now RWA is RWA minus stable coins, right? Because that's something else, right? So to me then, you know, you kind of have to say what it is. Like if it's real estate, say that it's real estate, right? If it's something else, if it's gold or treasuries, say that it's that, right? So RWA is non-descriptive. So yes, I struggle with people who just run around saying RWA because that phrase doesn't mean anything.
But the infrastructure underneath it, I think maybe I didn't ask the question correctly. Like RWAs is everything, right? You can tokenize anything, particularly. The whole point of blockchain and crypto is creating a better system to move and transfer assets and wealth, and, you know, create
so there's two kinds of
scalability.
like infrastructure for RWA. One of them is like a DEX, of which we already have like Uniswap, right? And the other one is things like centralized exchange, of which we have things like Binance, right? So I'm really curious, like, what the unique RWA infrastructure is, other than something that is like highly regulated, which I think gets you into Robby's topic, right? Which is you know, the regulated side.
I think the biggest problem, I guess, in the general category is, like, one, it's too general, and two, it often relies on trust. And when people bring some of those like real-world assets, like real estate, they look at the TAM as a pitch, like, hey, this is like a huge market, but they don't know necessarily who to market it to. Like the real estate specifically, like RWAs, I'm like very bearish because they are being marketed to crypto people, but the returns are not aligned with what crypto people expect. And then the RWA, like itself, is like highly dependent on the operator, which like adds like a lot of trust into the system that's supposed to be trustless.
Yeah. This is what I call the Brooklyn Bridge problem, right? Which is, I have a Brooklyn Bridge token. I'll sell you the entire Brooklyn Bridge for like $1 million, but I don't even own the Brooklyn Bridge, right? So, like, you know, for sure it has that problem, right?
I'll just add a few cents here. So the way I see it is, everyone has been talking about it, that, hey, like, you know, Wall Street is going to come, okay, with their money. And what makes it more people to believe so now with the real world assets is the word real, okay? So they feel more safe potentially in crypto space. But as much as it's something that it was anticipated and is driving the bull run, obviously, it has a lot of room for speculation because of the things that Miko said. So, you know, let's, you know, tokenize everything that is moving there. So in the end, it might be a beginning of a big bubble, and I'm just curious if it's going to.
I think it's dead in the water, and I mean, from what you guys are saying, is like there is no killer use case, and at the end of the day, yeah, you can tokenize everything. Great, well done. It's there. It's on a blockchain, but okay.
I think actually,
I kind of like fake world assets.
I think actually one of the killer use cases is, and this gets into regulatory again, is essentially fractionalization. Yeah. Because, you know, if you think about what fan tokens are, if you could actually own a fraction of your favorite football club or something like that, then this makes sense, and that falls under that broad tent of real-world assets.
Yeah, and by the way, like, this is a application
but that's a highly regulated
and not
space.
An infrastructure, which is that, you know, the idea that you described about real estate, like, if you build an application that allows for fractional ownership of real estate that's targeted at young people who are despairing that they'll ever own their own home, but they could own maybe something fractional that gives them the ability to sort of Airbnb around, like, that's an application, and that might make sense.
Yep.
Yeah. Yeah, it has to have that. It has to have that real utility, right? I think that's the main takeaway. We could talk about venture capital investing at length. Thank you very much, gentlemen, for your time. I hope you guys enjoyed the panel and enjoy the rest of the conference. Thank you very much.
Thank you.
Thank you.